Good morning and welcome to Equity Story Trade Watch, Friday, the 28th of April. I'm here on my own. Dave is unfortunately busy this morning, so I'm going to go run through the actual announcements this morning. Before I do that, you've got Equity Story disclaimer in front of you. Every story I talk about, every stock is based on fundamentals and technicals only, so nothing personal. It's all general advice only. Okay, last night, great movement on the S&P 500, on the Dow, on the NASDAQ. NASDAQ was driven very, very hard by some of these tech stocks, especially Meta. Obviously, we had some good results out of Microsoft. We had good results out of Amazon last night, actually, Meta as well, Google. So it's the cream of the cream is actually delivering, I suppose, that the movement in the NASDAQ. And that's good to see that these stocks are actually driving the markets, because that's normally probably something that's very risky for a lot of investors. So it's good to see that that's now become almost like the go-to safe haven place. And I think that's probably going to be now like this from now on. So if you are going to run through safety, it's probably the Microsofts of the world you're going to be running to. Now, again, just before I go on to the actual announcement, I'm going to, like I said, probably go through a few stocks. And thank God we've got the end today of the quarterlies, because it's been a fairly busy the last couple of weeks for me. But it's actually pretty good because we had some really good results, and potentially we've set ourselves up for the next few months. But just interested to see what's actually coming up next, and that's next week. And we've got, of course, the RBA decision, which potentially could see, I think, potentially we could see rates on hold again, because the inflation data was actually fairly positive or benign. When I say benign or positive, I mean that it sort of fits in within the rhetoric that the RBA has been going on about. They want to see, obviously, it come down. They want to see certain numbers, and that's sort of what we saw this week for the inflationary numbers. So I think that sort of points a picture that we're probably going to have another little break. Hopefully that's it. We're not going to see any more. As long as that inflation keeps coming down over the next, say, month, we might pretty much be at the end of that interest rate rising cycle. So that's good news, which means for me as an investor, the stock market gets more and more interesting from now on. So, you know, you'd be looking at some of the stories that we talked about and see the themes are still exactly the same. Nothing's changed there. And that is the growth story, the actual value stories with a bit of growth, if you can find them. The dividend stock still probably going to be quite positive. And of course, you know, some stories that are going with the flow. And we're going to go through some of those as well, like HLOs of the world. All right, so let me switch the actual screen onto my Reuters so you can see exactly what I'm looking at. And we're going to go through some of these stories. And I'm just going to switch to the charting. So I'm not going to go through the actual announcements, but I'm going to just show you the charts, and I'm going to say yes or no whether this is actually good or bad, plus a little bit of commentary, of course, because I like to do that. So let's have a look at the first one. And this is from last night, by the way, because there has been a slew of quarterly results all the way through yesterday till the evening, and all the way this morning, and it's still coming up through. So the last line of those quarterlies come through today, because it's the last day of the month, really. When you look at the weekend that the month actually ends on. So what have we got? So let's go with PLY as the first one. So that was last night. Look, I actually didn't mind this quarterly at all. It looked decent. However, it's still unprofitable. That's a big negative, of course, in this market. No one wants to see negative cash flows. It just means capital raisings. It just means high risk. And right now, the market is just really not interested in that sort of story. So it's going to take a bit of time before it sort of maybe gets to cash flow positivity. But in the meantime, it's just untradeable, untouchable. But I like the story overall. I think it's getting better and better with time, but not now. Next one, art. I think there's something definitely wrong with art for me. Look, I used Tasker again, right? Last week. And the problem is, you set a task for there. The person on the other side, which is obviously I'm trying to get someone to do something for me, right? The person on the other side contacts me saying, "Yep, okay, I can do the job." Then he contacts me privately saying, can we do this outside of the Airtasker because they, charge me a lot of money. That's the problem. That is the huge issue of why, there's a one-off job, and then the rest of the jobs that maybe the follow-ups and so on, you can just take it privately without going to Airtasker if you like the person who did the job for you. So you bypass all these Airtasker stuff. So it's almost like a one-time job, and then that's it. Which is just a model that's just not going to work long term, I don't think. So for me, I just struggle to understand this and how it's going to work unless they incentivize, reduce the actual fees involved, because they are extraordinary. I looked at it, I had to pay like almost 10-20% on top of what I actually wanted to actually charge. So that's just ridiculous. So for me, something's not right. They're cutting costs, of course, but the model is just not right for me. So I'm passing on Airtasker. Let's look at PLS. Pilbara, the numbers, when you look at them, not fantastic. So production was down. The price they're getting was down. Costs are going up. So there's a lot of negatives in that report. Of course, they are, to try to expand the production moving forwards. But if the price keeps crashing down, doesn't matter how much they expand their production by, they're probably going to still struggle to generate the cash flows that we expected them maybe 6 months ago, which means I'd say this is coming down. I just cannot see that going back up to that $455. In fact, if you're in there, look, you can obviously still play it by the charts. Of course, the strategy is stick by the CTM rules, but when you look at that quarterly, it's a struggle street getting any further than this, and the negativity on the price of lithium is down, which means I think it's probably more likely that's going to go back to the 350 than going up to 450. So yeah, I'm on the unfortunately glass half full side of things. All right, let's look at IGO. Not bad quarterly result. I actually don't mind this company. It's got exposure to lithium, it's got exposure to nickel, it's got exposure to some other metals there as well, plus battery making as well, right? So hydroxide making, sorry. So it's actually, there's a bit of extra cherries on top, if you call it that, where it doesn't just mine lithium, it actually adds value to their products as well. So for me, it's not bad, but the sentiment in the lithium space is not great at the moment. If I'm looking at trading economics, all the commodities, unfortunately, at the moment, a little bit weak. So it's not helping them. So it's looking fairly weak. So we had a pretty good recovery. Then we had today, I suppose, down at what, let's have a look on a daily basis. It's down 2.45%. That's not a great looking on a daily. That's probably a sell. And on a weekly, that's also a sell. So if you are in this, technically, if it finishes like this at the end of today, you're getting out. Let's look at VHD. So this is now going back to a tech space and healthcare space. So not bad. Again, it just needs to get to the cash flow, well, probably profitability more than anything else. Again, it's still sort of caught in the no man's land at the moment. It's probably maybe just going to go sideways for a while until we see that ramp up and getting that positive cash flow / profitability. And at the moment, maybe just not quite there, but it's not bad. And watch list for me. And you just never know, if it's actually, look, the chart is actually not bad. When you look at it here, it's close to a buy signal. If it gives another 1 or 2 cents, it could actually be not bad for tomorrow. But saying that, like I said, I just want to see a little bit more out of this. Fundamentally, that is. Technically, it's looking good. Fundamentally, just needs a little bit more for me. But it's getting there. Next one, M17. So there's some really interesting stories, of course, that we follow. We had some trades with, and like I said, today's the last day, so we're going to run through them. And again, look, decent. Some of these are bouncing on the back of the NASDAQ, so you've got to take that into account as well. Even the quarterlies might be okay. This is actually coming back now above the trend. So for me, probably a little bit early, but I like that price action today. It just needs to do more. Watch for it over the next maybe week or two, see if it can get back over those trend lines, preferably, over 64, 65, and maybe we have a trade at 71. If you can get over 74, we're back. We're pretty much back over 75 cents. So hard money at the moment, not touch. Let's go to the next one. RMD, they're calling. That looked very good. So let's have a look what the reaction is from the markets, because that for me was pretty good. But it's actually had a little bit of recovery already. Let's have a look on a daily as well, just to see what it's doing. That's not bad at all. That's good action. But is there a trade in this? Technically, probably not, because there's a bit of resistance around 35. So we're not that far away from it. But if you're in this, technically a hold, good quarterly to delivered. So for me, it's a hold overall. Let's move on to the next one. OIG, I'm not going to talk too much about, but let's just have a look at the chart. It's because obviously it's at the takeover offer, but let's just see what is happening. Yeah, pretty good looking chart. That's getting closer to the takeover, so that's probably going to go through. Next one, let's look at 5GG. Even though sometimes some of these stocks are not trading very well, I still just want to have a look at exactly what they are. And right now, not very good state, so pass on that. DTC, actually not bad. They are trying they're very, very hard to get the cash flow positivity going. But again, it's just not doing enough. Even though we had a little bit of a positive day today, we just need to see more growth out of it. That's probably the top line for me. We need to see more growth because it's, on a company that's in a tech space, you expect more growth out of it, which is not coming at the moment. Now, this is the hero of the day, MP1. Really surprised the market today. Really strong jump, 30% odd on the back of its upgrade to EBITDA. Now, of course, this company has been in the doldrums because of its really strong cash outflows, and there's still cash outflows here, right? So let's not forget about that. However, they're talking about EBITDA, which is a simple look through to see how they're faring on a fairly simple basis, where you just take off their cost of goods sold out of it, and it looking decent, especially when you look at that huge jump that they've talked about today, which is ahead of the expectations of a lot of brokers. So they're going to have a positive EBITDA this year of about, I think, in the tens of millions. But then they're looking at a huge jump in FY24 to about 40 million odd, right? Which is a really substantial jump in that. And you hope with that jump in FY24, we're going to get it close to profitability on the back of that. Saying that, there's still obviously that 12 months to see how it goes, because it's disappointed previously a few times. However, maybe this is the start of a re-rate for the company. So I'm watching this with interest. If it gets over that $6.50, there's potentially a trade back to that $9. So I am definitely watching this. One day again doesn't make a huge change for me. However, that step up change in EBITDA profitability is very, very important as a first step towards that overall profitability. So I'm watching this. Really strong reaction by the market. I want to see what the brokers say over the next couple of days, see what the potential could be here, and maybe next week we'll look at it, but it's just way too early today. However, definitely getting back on my radar again. Let's see what happens. Next one, Coles. Let's have a look at that, because they come up with a quarterly update just to see how the growth is going. And again, remember, this is just a dividend stock, so really not too exciting. However, it's up above trends. You're getting your dividend out of this. Nothing wrong with it. So if you're playing the dividend game, technically, fundamentally, still pretty good. Moving on. MGR. This is our downgrade. So the downgrades for me is a sell automatically. Doesn't matter what anyone says. Doesn't matter if it's the middle of the week. Downgrades normally for me are a sell. Now, saying that, not every downgrade is obviously the same. Today, because they had a pretty good week so far, today is down about 1.7% on today's downgrade. So for me, I would be probably, if I'm playing this for some reason, or I'm in this for some reason, and they're blaming it on their weather events, which I don't even know how they can blame it on weather. We had pretty good weather last maybe a couple of months, right? So anyway, they're blaming the weather events, talking about they're going to have a lower earnings profile because of that. That to me is a sell. I pretty much don't even care what they say, whether weather or something else that happened. So for me, it's a danger sign. Really don't want to be interested in this. So getting back to the weekly again. it obviously struggled with that, and I think that's going to come back to that $2.20, maybe even below on the downgrade, because you never know, that could turn into a bigger downgrade down the track if they keep claiming there's a weather problem down the track. So for me, I mean, if you look at long term anyway, it's been a really not a very good performing story. So there's something not particularly right with this. Pass. All right, let's move on to the next one. CRN, this is a coal stock. Let's have a look what they've come up with today. And look, not a bad story. It's just had obviously fall back a little bit. It's below trend, so we're not interested at the moment, even though, you know, you've got a story that really should be probably doing better than it is because it is in the methodological coal. However, coal is not flavor of the week, maybe of the month even. So there's a little bit of weakness, as some of them have been actually sold off quite significantly. So maybe stay away from this space right now. Let's go to the next one. Whisper, another big downgrade. So another one, anything downgrades you sell, any upgrades you're probably looking to buy, with a bit of research, of course. So this is our downgrade, down 10% for the week. Let's have a look today, what's happened. And I'll just put it on 2 so you can see what's going on. Actually 1 year so you can see what's going on. So today, down day today is 10.8%. On a tech space day that's going up, that's not good, but that's a sell and a half. You don't want to touch this at all. Somnomeds is another one that really promises a lot, unfortunately struggles a lot as well. Even though they said they are, you know, looking at 80 million probably or plus revenue side and really going pretty well on that side. It's the profitability on the bottom side that's actually still not delivering anything. So on 80 million without giving a profit, there's something definitely needs to be addressed and changed to see that positivity come in, because we don't want to see them keep raising cash and cash and cash. So look, market doesn't like it. We don't like it for the moment, even though it's, you know, it's something that maybe should be doing better than it is. I'd say maybe someone will probably come and take this out because it's underperforming really what it should be doing. So let's move on to the next one, AR9. Another little tech stock in the cybersecurity space. So it's just this, you know, small, I suppose, cash flows, small revenues. It's just too early. You know, it's another promising company, but it's just way too early. So it's just difficult to get excited about it. You know, different time, different possible outcome, right? So in times of greed, this probably would have been trading much higher than it is. In this current times where we're looking at profitability, cash flow positivity, it's just not there. It probably needs a couple of years, but in the meantime, there could be another probably couple of raises in there. All right, let's move on to the next one. What else have I got? I've got TNT. So let's have a look at that one today. And again, it's not fantastic. As you can see, that's not a good reaction today. It's been a struggle again. You know, they're probably, this is probably a case of a company that's trying to build Rome in a day, right? They've made so many acquisitions. It's just not the way to go about it. It's just very confusing, very messy. The investors just don't know what the hell is going on. They've got so many different arms to this business now. Instead of focusing on one particular maybe space in cybersecurity, they've just got so many things going on at the one time. It's just very difficult to get your head around. Market's saying no. I don't think they're hitting that also targets that they need to be hitting with what they've got, especially the huge revenues. So yeah, it's still a too hard card basket. So pass for me right now. All right, last one, but not least, is AV1, which of course we follow. We like the story overall, and you know, they're sort of on a track from what we're thinking revenue wise for FY23. The problem here is the cash outflow. So the costs probably larger than we hope and anticipate, which means at this current rate, and hopefully that will change, you know, there could be another capital raising in the next 6 months odd. So I think that's what the market's sort of worried about a lot with this sort of negative cash flow companies, that yeah, they might be growing the top line, and it is going, you know, in a trajectory that we expect it to go on the top line. It's the bottom line that is really worrisome, because if they don't sort of look after that, you're going to see the dilution with the capital raisings. And, you know, when you've got a share price of 6.3 cents, it's just going to mean it's going to be greater dilution. So you just want to try and avoid that. when you look at the actual commentary today out of AV1, it looks decent, but like I said, it's the negative side of it, which is the costs, is what probably the markets is focusing on here. And understandably so, because we've just talked about how the negative cash flow companies are just frowned upon, and really people, investors, big investors are just not interested, and just lack of interest means the share price will just drift lower. It's not because everyone hates it, it's just lack of interest, lack of buyers in these stories. So it's just drifts lower, then means 6 to 12 months time they have to raise cash at lower prices, and it's just the cycle is a vicious cycle. So we just want the hope and pray that they ramp up those revenues quickly, they can narrow those losses down, and they have less problems with the cash flows. But right now, of course, technically speaking, you cannot touch it. It's because it's below trend. So yeah, it's just one of those things that is going to be, for a trader, got to be patient to see where it ends up in the next 3 to 6 months. But yeah, from what the cash flows are looking like, they probably might need another capital raising, say probably 3 to 6 months. So we'll see how they go. But I think that's pretty much covers the companies that reported today. There's obviously a lot of stragglers today. Really nothing amazing. Like I said, MP1's probably the standout with its upgrade to its EBITDA. So we're going to be watching that. But other than that, let's just have a quick look again, flick back to see what it's actually trending up to the top. Like I said, MP1 is definitely the high flyer. Look, my little SignMinder is doing quite well, which is nice to see. Hello World is still going well. Remember, we talked about it yesterday as a story that's on the up because of its upgrade. We love buying upgrades, and this is what's actually coming up with. Let me see what else is still going quite well here. We really like Camplify as well. I think that was pretty good. So that potentially still looking quite decent. And maybe there's a buy here, looking at the actual chart. So we just have to have a look at it. Actually, let's put it on 2 year. Let's see actually 1 year and what's going on, and put it on a weekly, because the daily looks pretty decent, right? But let's have a look on the weekly. Are we there yet? Not quite. We probably needed a couple of cents out of this, but it's actually getting there. So if we can see it, maybe next week, we're going to see that. I really like that. That delivered a pretty strong growth. And let's see what else it's got. And of course, my John Ling's, I think that is very, very good as well. So out of that, a lot of interesting companies. And actually the one probably the standout for me, I have to say, and that's still on my list, got it in our portfolio as well. Look at that chart, car sales. Wowee. So, if you're listening today to the Trade Watch, this is probably the one that looks like a standout for next week, because it's just looking, that's broken through the resistances. It's got, let me see, is it 12-month highs? Yes, it is. So that's bullish as you can possibly get. There's probably a trade right there for you. So if you are going to be looking at it, and I will actually put it on as a trade today. So you're looking by around the 24. You've got to stop at around 22. Yep. So that's 22. So that's 21.90 would be my stop. Yep. And you're probably talking that $26 right there. Alrighty, guys. Thank you very much for listening. Have a great weekend. Good luck with your trading. And join me for Ask the Analyst. And again, I'll probably be by myself. Dave is quite busy today. I'll probably be by myself. So join me for Ask the Analyst at 12 p.m. Cheers.